Warm greetings, guys. In this video we're going to talk about currency pairs and their classifications. We have three classes of currency pairs. That's the major currency pair, the minor currency pair or the cross currency pair, and we have the exotic currency pairs. We can't talk about the major currency pairs excluding the US dollar, because the US dollar is the world leading reserved currency pair, and 88% of the time traders do trade with the US dollar. So the major currency pairs are more liquid. Traders like trading it a lot, and the country's fundamentals are stronger. So these are some examples of the major currency pair: the GBP USD, the USD JPY, the AUD USD, the Euro USD, and etc. These are currency pairs which most traders like trading with it. If you're a beginner trader and you want currency pairs to trade, I recommend you trade with the major currency pairs, because on the broker they have low spread. They have low spread, low commissions, and you can make more profit with these major currency pairs. So let's talk about the minor currency pairs or the cross pair. You never see a cross currency that is paired with the US dollar. They can be quite expensive when you are trading them, and these are some examples of the minor currency pairs: Euro GBP, Euro AUD, and CHF JPY. Let's talk about the exotic currency pairs. If you're a beginner trader and you don't know much about the markets, I recommend you step aside from the exotic currency pairs, because most of the time the exotic currency pairs can be riskier and they can take a lot or high spread or commission fees on the broker you are using, and they are not as liquid as the minor and the major currency pairs. The exotic currency pairs are from developing countries like Mexico or South Africa. Let me give you a clue when trading. We have something called the commodity-based currencies. These are the Aussie dollar, the New Zealand dollar, the GBP, and the Canadian dollar. Now, when commodities are rising, you should expect these currency pairs to rise along with it. Gold is paired with the Australian dollar, so if gold is rising, you should expect the Australian dollar to also rise. When meat and cheese are rising, you should expect the New Zealand dollar to also rise with it. When oil is rising, you should expect the pounds and the Canadian dollar to also rise with it. Guys, I believe this will be helpful in your trades. Like and subscribe to our YouTube channel and click the bell notification button so that you'll be notified in our subsequent posts.